Spilling waters get out. Get back, Gruffy. That's Gruffy. Get back, you bleeding dusty mongrel. Good morning, everybody. Happy Thursday. It's March 9th, 2023. Great to be with you today. My name is Bob Lang, and I run explosiveoptions.net. And as you can see, I pointed to our new family member over here. We don't have a name yet, but we're working on it. The new little puppy that we got yesterday, and we're very happy and proud of our new little member of the family here. But who let the dogs out, right? So let's talk a little bit about markets here and what's happened this week. It's been an interesting week, of course. But first, I want to share with all of you an opportunity as well, too. So come over here and take a look at, this is a much older picture of me. I'm much better looking today, as you can tell, than I was when this picture was taken. So it's March Madness, beat Bob Lang, right? I put a couple of tweets out there, a couple of links in our chat room and elsewhere. This is the March Madness Challenge. Of course, you know, March Madness starts next week with after the selection show this weekend. And this, if you fill this out, go towards the bottom and you can fill this out, fill the entry. It has to be in by next Wednesday, which is March 15th. Fill out your name, your email address. You agree that you to the rules, and then you certify that you're 18 or older, and you enter here. And then when the brackets come out, you'll be sent a bracket to your email, and or just being able to get onto cbssports.com where we have the where we hold the contest. So it's free to enter. There's some nice prizes as well too for the winners. First prize is a 1-year membership in Total Access, which is all 3 services, Explosive Options, the chat room, and the Spread Trader for a whole entire year. That's a $3,000 value. Second prize gets 6 months, $1,794 value. That's 6 months of that Total Access. And the third prize is 3 months of Total Access. Again, all 3 services, which is about an $897 value. So this is really great, great stuff here for all of you. So we may even give away some more prizes as well too, depending on how many people sign up. So this is a good opportunity for you to have 0 risk on to try and get on board. If you win the brackets, you're gonna, and especially if you beat me. If it says here, if your bracket comes in higher than me, you'll win a free month in the chat room. So how can you beat that, right? So, all right, that's enough for the advertisement. So make sure you get in there and sign up for this. You can see the link up here. Says explosiveoptions.net/bracket-challenge/. Okay, so I'll be putting that link out there out on social media later on this week and into early next week. So again, deadline is March 15th. All right, so let's take a look at markets now. The futures have rallied here, right? And they've rallied off of the news that jobless claims were on the rise this last week. And I don't think that was really truly the catalyst, because again, this is March, and I think the assumption here is that, oh well, tomorrow's jobs number is going to be weaker than expected, right? Let's remember something. This jobs report is for February, the one that's coming out tomorrow. The jobless claims is for March, right? So we saw still had some 195 to 200,000 jobless claim readings last month. So I think trying to make that linkage there is kind of is rather weak. But you know, we have seen some big movements in the futures when news is released, right? And we can see that right here. Take a look here, right? So the big move in the futures here, the last 10 minutes here, is accompanied by a drop once again in volatility. So what's happening again is the market sells off volatility, because once the news is released, there's a time to exhale and say, okay, now that's out of the way. We can move forward. And moving forward, I think the market is assuming or expecting that things are going to be much better and not any worse, right? Better mean could mean sideways or even just neutral activity, right? However, the GDP now forecast, nowcasting that I took a look at just a few minutes ago, the Atlanta GDP as of yesterday has first quarter GDP coming in at 2.6%. That's up from 2% last week. Why did it jump up? It jumped up because of the rise in personal consumption expenditures, which we saw the markets get beat down for a little while and then rally back on Friday after that PCE report. So I think that was information that shows it was good for the economy, not so great for inflation, right? And we did hear Chair Powell on Wednesday and Tuesday talking about how their job is not done, that they might have to raise rates even at a faster pace than they've been doing for the past couple of months. So remember, the last rate hike came in February. That was 25 basis points. They were hinting along that perhaps we might get even more than that, and even the terminal rate being a little bit higher, close to 5.75 to 6% on the terminal rate. So we're yet to see how that unfolds here. But let's take a look at markets the last couple of days here. So I want to share the NASDAQ with you. And you can see that, of course, in the early part of February, it made a big, bold move with the 200-day moving average, which is the dark line over here. And we've been correcting a little bit off of that. This is the QQQ. We've been correcting off of that, of course, for the last month since February. And the early part of March, we came down and tested that 200-day moving average one more time. That was last week. And then we rose up again and were rejected on Monday. Over here, Monday, here's Tuesday, Wednesday, and we created an evening start. So now what's interesting is that we have a lower high, lower low, but we have a different type of a doji. We would normally see if we were looking for a follow through from Tuesday. Yesterday's doji would have been a red bar over here, and not a white bar. So does it invalidate the pattern? Not sure yet. We have to see how things unfold today. But if we have an up session today, then that evening star pattern is invalidated. Okay, and we'll be looking for some other pattern to develop. Now, as far as the breadth is concerned, we did see again, stocks above their 50-day moving average move back below into that blue box again. And we talked last Friday. We had climbed above there, and I cautioned everybody to say, look, you know what? We got to move above that blue box. It's got to sustain itself up there. And the last couple of days, especially on Tuesday and Wednesday, Tuesday specifically, the NASDAQ got hammered, and we ended up breaking back down into the box. So the more time we spend into the box, the worse things are, and the breadth is going to is already on a sell signal right now, and it could permeate things, cause a little bit more selling to occur. Right now, at the location of where we are in the box, it's not an emergency just yet. If we pull down into this 30% area, 25% area, that could be a problem. So as we look at new highs, new lows, and we notice that in all of 2023, mostly January and February, we've had some healthy prints above zero. Yesterday, we had a print below zero for the first time in a while. If we get a follow-through day on that, we get another negative print. That is going to set up a bearish signal on this indicator: new highs, new lows. The one indicator, though, however, that has been rather strong and been supportive of the markets going higher has been the VIX, right? And we see the VIX has been muted every single time we talked about this, we wrote about this. Recently, is that every time a piece of news comes out, the market is being sold off in volatility, right? Whereas the offsetting trade is to buy futures. Now, is this driven by 0 days to expiration options? Partially, it is, and I think what's happening is that when you get a preponderance of buyers coming in with calls, the market makers have to come in and step up and make sure that they can at least put that trade on as well. They're buying futures against these people who are buying calls on the SPY, the NASDAQ, or whatever. The offset of that, of course, is selling volatility. We buy futures, you sell volatility, and that seems to be the case. Is it dangerously low right now? Sure is. With a lot of uncertainty right now in the markets, with the Fed in a hawkish mode. The economy somewhat doing well. We have a lot of issues to deal with in terms of inflation, in terms of we still have this war going on that not many people are talking about with Ukraine and Russia, and then there's issues with China. A lot of things out there, a lot of worries out there that could derail the markets at any point in time. So we have to be aware of all that stuff. But the VIX is pointing towards a high level of complacency right now, and it's not healthy, and eventually is going to get paid back. I'm not predicting when that's going to happen. I don't know when. I don't know how it's going to happen, but I do know that a big spike in volatility is going to surprise everybody, because what's happening right now, I think the more time the VIX spends below, say, 20%, the less probability people believe that the markets are going to correct, and they don't believe that the markets are going to get hammered with a big rise in volatility. Look at what happened on Tuesday. What happened on Tuesday? The markets got hammered right after the note came out from Chair Powell that he said that rates were going to go up possibly at a much faster rate than they had been before. And we saw Eurodollar futures fall. We saw Fed funds futures fall. We saw those rates going up. We saw long-term rates going up. And we saw the S&P futures drop down sharply. Well, people looked at that and said, okay, well, I'm hands off right now. I'm risk off today. I'll just wait till Wednesday and jump back in. And we did see a drop in volatility towards the end of the day. And again, we're seeing it a little bit this morning. Where are we at right now? So we popped up over here. We're up. We're flat right now in the S&P futures right now, but we were down about 11, 12 handles. I think a level you've got to be paying attention to, and I'm going to give some credit to one of my guy I follow on Twitter. His name is VWAP Trader. One is simple. He put out some very important levels on the S&P futures. 3980 is a level that he was watching, and in fact, look at this. We saw a test of that 3980 about 30 minutes ago, and then earlier in the evening at about 5 a.m. This morning, and then that was that. So that's the level that he's watching to see if it gets break. Now this is the futures, not the cash. The cash is about a 2 or 3 point differential from the futures right now. It's a little bit lower, little bit lower than the futures. So we're talking about on the cash probably about 39.77 if we get to that level. But on the futures, 39.80 or so is a spot where we could see the markets flip down towards bearish. And again, I think there are some buyers who took the markets up here just 20 minutes ago and said, "Hey, look, you know what? That was some news that's out of the way. Jobless claims still rather low, 211,000, but still enough to say, all right, look, I mean, I can go ahead and sell volatility over here and buy these futures up." Without any harm done. And you can see that right here on that particular bar, you see a big drop in volatility here on that right after that release came out. So something to watch for. That's going to be it, I guess, everyone. Thank you for spending a little bit of time with me. I did send the market blast out earlier this morning. Have a chance to read that. Let me know what you think. And I did put chart of the week out yesterday. Take a look at that one as well, too. And thanks for all the nice comments about the new puppy. And we'll be back on Monday morning on the 13th of March. Have a great weekend, everyone. Trade well, and I'll see you guys in the chat room today. Thanks.